Hey traders and investors, it's Serge Berger here. Today I want to quickly go through something very important, and that's to make sure folks understand that making a trade or making a bet ahead of the FOMC statement, whether that's in stocks, interest rates, even corporate bonds, FX, really anything, is not a very smart move. Uh, Now, let me be clear on that. If you have an option strategy and there's some tremendous opportunity with you see an option skew happening somewhere like sort of as an anomaly, that's fine, but that is definitely the exception, not the rule. If you are making a bet on the outcome of the FOMC statement, you're basically telling the market that you know. Now, this is for the active investor and trader, not for the long-term investor. Long-term investor, that's not what I'm talking about here. If you're trying to make a bet ahead of the FOMC, if you're buying the S&P 500, if you're shorting, if you're buying puts, if you're buying calls, whatever you're doing, you're telling yourself you know something, and you trust me, you don't. You don't know anything. That's not an insult to you. That's just a fact. No one knows really except for the Fed what they're going to do, and actually even more beyond that, no one really knows how people will react to it. So even if someone actually knows what the outcome is going to be, no one really knows what the reaction will be. Now, the broader trend in the market remains up, right? I've talked about this now for months and months, and I do think we are in a late cyclical market. Also, from a seasonal perspective, we should be seeing some more volatility. Haven't really seen that just yet, but here in the S&P, you can see we're still trending higher. But the fact is, you don't really need to rush into this before the FOMC. You can do it afterwards. Now, what's really important, guys, when you do this, you need to understand a little bit of how all this works. So you're gonna get, once the statement comes out, once there's a press conference, these days there's also a press conference and some of the meetings, as is the case this time around here on Wednesday, September 17th. You want to make sure you let the initial reaction sort of settle a little bit, because the initial reaction often is sort of the wrong reaction, right? So if they really rally stocks higher for the first hour or a couple hours, a lot of times it'll reverse the opposite direction and vice versa. Where you can get a better clue of it all is by looking cross asset. You need to look at a few things. You need to definitely be able to follow bonds. You can follow bonds these days via the ETF. Very simply, the TLT, that's the longer end of the yield curve. So if things get more dovish, in other words, if they're going to keep rates lower for a longer period of time, you'd probably expect this to be flattening. In other words, you'd probably see yields here go probably the whole yield curve go down a little bit. In other words, you'd see prices of bonds go up a little bit. So that's the kind of thing you'd see. But what's more important is just kind of watch the reaction. Also look at the dollar. Very important. You can look at the dollar these days by the UUP ETF, and you can see obviously dollars had a major move. So keep an eye on all that. And then if you overlay all that, and if you do trade stocks like a lot of people do, then if you then see that bond yields or going up, then and the dollars is going up, you have a decent probability that stocks will actually rise. But again, keep it in context. Don't rush into it. I think that's the most important thing. Stocks here do remain still very favorably positioned. The S&P is basically basing above recent or past resistance, now support. Now again, all that can change with whatever they say today, but for the time being, that remains constructive. So if we really break down and the S&P breaks, say, below 1980, I do think the downside here is fairly open. Certainly, at least to the August lows. On the opposite spectrum, if you get higher, somewhere between 2040 and 2050 certainly is the next upside target. That's not impossible to reach. So hope this makes sense, guys. If you've got any questions, as always, you can hit me up on my Twitter handle, which is SteadyTrader. And I'll see you in the next video.